now go into the business of the meeting. The voting on resolutions will be done via an electronic system. Our transfer agents, CopServe Zambia, will provide detailed guidance on the procedure for electronic voting before the resolution is passed. Questions will be tabled before we pass the resolution. So we move on to the first and only agenda item, which is to seek the approval of the shareholders of ZCCMIH for the transaction relating to the proposed conversion of dividend rights and certain economic rights attached to ZCCMIH's 20% stake in Kansanshi Mining PLC, or KMP, to a 3.1% life of mine gross revenue royalty pursuant to the royalty agreement and the related variation of the rights ascribed to ZCCMIH's Class A shares in KMP. We will be calling it the transaction from time to time. Members to note that the details of this agenda item are provided in the circular to shareholders, which was issued on 9th of March 2023. I will now invite the Chief Investment Officer, Mr. Brian Musonda, to make a presentation just highlighting the major items of significance regarding the proposed transaction, and it is largely based on the circular that was circulated on the 9th of March.
Members, as mentioned by the board chair of ZCCMIH, we've prepared a presentation which will be running you through. It's just a summary of what is contained in the circular that was sent to the shareholders, but we decided to just make it brief and also try to be able to explain a bit in detail in terms of some of the information that is contained in the presentation. Thank you very much. So members, we have a presentation on the screen. We can go to the next slide. There we're just putting a disclaimer as the ZCCM indicating that the presentation that we are making just for purposes of giving an overview of the operations of ZCCM as well as the target institution under discussion, and also advising that some of the information that is contained in the presentation as well as the circular are forward-looking and based on specific and certain assumptions. Thank you again. So in terms of the presentation outline, we'll speak to the transaction summary, which is the comparison of the royalty as well as the dividend in terms of where we're transitioning to. And then we'll take you through the pro forma effect of the transaction and also speak to the next steps that are supposed to be undertaken in terms of implementation. Next slide, please. Thank you very much. On this slide, members, we just want to compare the two models, the current model, which is the dividend model, to the royalty model. So the current model that we are using, which is a dividend model, is always payable based on the performance of the company, and the dividend is paid at the discretion of the board of directors. In terms of transition, we're trying to transition to the royalty model, where this will be a fixed charge on the value of the minerals that are going to be produced and sold over a specified period at the market price. For dividend, the current model, there are a lot of uncertainties. As mentioned, it's dependent upon the performance of the company, as well as the dividend policy that the company has. Whereas for the dividend, there's reliability in terms of the revenue that we'll be making as the royalty is payable as long as there is a production at a mine. As mentioned, members, again, dividend is dependent on the company's profitability, whereas a royalty is paid irrespective of profitability of the company and ensures steady and more predictable cash flow. In terms of the royalty that we are presenting before you members for consideration, in terms of the upside participation, to make mention to the members that the royalty gives ZCCM or any other investor direct exposure to the benefits of increased production as well as the higher metal prices. So you benefit from all the upside potentials that a transaction has. So if the production is higher, you benefit, to get more. If the metals prices also are higher, you benefit. In terms of the downside protection, to make mention that because the basis of the payment is on the top line revenue, so you're not exposed to expansion projects as well as the cost of operations. So it protects ZCCM from the worst performance of the company. In this case, if Kansanshi is in production, a royalty will be paid, even if Kansanshi at any given time producing at a loss. Next slide, please. Here we are speaking to the rationale of the transaction. So based on our current 2020 to 2026 strategic plan, we looked at the way we are structured, and there was a proposal that we consider bringing in other novel ideas of making revenue. So rationale number one, we are looking at increasing income for HCCM from Kansanshi Mining Limited. As we progress in the presentation, we'll speak to how this is being attended to and how it was incorporated in the structure. Another rationale, what we are looking at as motivation from the ZCCM perspective, was to ensure that the current value on the balance sheet of the company is released for the benefit of both current shareholders. Third rationale, we are looking at the outcome of the transaction where the ZCCM will still retain active participation in the company through board representation. The other rationale was to ensure that all the sources of current as well as future benefits are captured in the transaction. Next slide, please. So based on the target outcome of the transaction, this is the highlight of the transaction in terms of how it has been structured. ZCCM will be entitled to a royalty rate of 3.1% of the total revenue. And when we compare this with the historic performance, assuming that the royalty model was implemented from 2009, ZCCM would have received royalty income of $672 million, whereas when we talk of the common dividends that are being paid without any exception, ZCCM only received $337 million. For the year 2021, information which is in the public, because ZCCM consolidated the financials, you will note that Kansanshi made the revenue of $2 billion, so 3.1%, ZCCM would have gotten about $60 million. The payments will be done on a quarterly basis going forward, and members also wish to know that in terms of the effective date of the transaction, it will be effective of 30th June 2026, meaning that for the last 6 months of last year, we'll be able to get a royalty as ZCCM. In terms of where this is covered, it covers the entire life of the mine of Kansanshi, which is expected currently to end in the year 2044. It also captures any future development and expansion projects that are going to be there. And also to make mention that even in an event that there's a new acquirer of the mine, the royalty transaction is still going to remain binding. From the shares perspective, members, you may wish to know that ZCCM is going to retain Class A shares with varied rights, as mentioned by the board chair, and also Kansanshi Holding Limited will be reclassified to Class C shares from the current Class A shares. In terms of board representation, members, to make mention that currently ZCCM has 2 board seats on Kansanshi, and it will retain the 2 board seats that we have. Another important point, members, worth noting is that for any VAT that is going to be refunded by government to Kansanshi, ZCCM is going to be entitled to 20% VAT. So this is speaking to rationale of ensuring that you capture all the future as well as the current benefits that the company has. Another point worth mentioning, members, is that in terms of relationship, all disputes are being settled. Next slide, please. As we are moving to the next slide, members, just to give a bit of detail in terms of how the 3.1% was arrived at. So members, ZCCM went through a robust process, working together with different advisors. So the starting point was the valuation of ZCCM with IH's interest of 20% in Kansanshi. We have two comparable valuations that were done by two independent and external consultants. After arriving at ZCCM IH's 20% value in the company, then we had to work backwards and came up with an equivalent rate. So the equivalent rate that was arrived at was the 3.1%. So the 3.1% is based on the top line, whereas the 20% that we currently have is just shareholding, and we get the benefit by way of dividends to be declared based on the company policy. As mentioned also, there's the element of the VAT that we spoke to. Members, you may be aware that whenever a dividend is being declared, there are a number of considerations that you're supposed to look at. And VAT refund comes in and brings in additional cash. So it is on the assumption that if this VAT was refunded to Kansanshi, Kansanshi was going to have more cash on its balance sheet and declare more dividends. So this is a right that the system has already accrued to it. So this speaks to the issue of the current benefits captured.
Chair, the next question is from Rowan Johnston from Auckland, New Zealand, who says, what are your immediate plans for the 195 million dividend payment which has been received?
The funds will be deployed in mining-related investments, as stated in the CMIH strategic plan.
The next question is from the same shareholder, Rowan, who says, how was the 3.1% royalty amount determined?
The 3.1% royalty was calculated using an independent third-party valuation model, which included the S3 expansion and also applied market discount rates. Third-party broker consensus assumptions were also used regarding copper and gold prices going forward. The royalty will be a percentage, i.e. the 3.1%, of the gross value of all metal products sold by Kansanshi and will be payable on a quarterly basis.
Chair, the next question is from Inutu, asking on behalf of Prudential Pensions Management Zambia and the shareholder on the Lusaka Securities Exchange. The question is, under the current Kansanshi Mining PLC articles and the Kansanshi Mining PLC shareholders agreement, ZCCMIH enjoys veto rights with respect to certain reserved matters. As the dividend rights are converted to the royalty, the said veto rights would replace rights under the new Kansanshi Mining PLC articles and the rights under the royalty agreement described above, appropriate for a royalty asset of this nature. It has been noted that the veto rights are being replaced by protection rights, but the relevant sections or extracts from the new Kansanshi Mining PLC articles have not been provided. Please provide clarity or definition of the protection rights.
I ask our Chief Legal Officer to respond to this question.
Thank you, Chair. The articles entitle ZCCM to, among others, withhold consent to KMP undergoing a change of control where control is not being acquired by a suitable transferee, that is, an entity which is not sanctioned and would not cause the company to breach anti-bribery laws and obligations or sanctions, and with financial, operational, and administrative capabilities to conduct KMP's mining operations. Also, to cause KMP to comply with the obligations under the royalty agreement, and where new B or C shares may be issued in the future, ZCCM's A shareholding will always equal 20% of the entire issued share capital of KMP. That is, with Kansanshi Holding Limited bearing the cost of any subscription price on ZCCM's behalf, such that its 20% interest is carried.
next question is from Elias Kangwa, shareholder from Luce. And the question is, how, if at all, will ZCCMH be disadvantaged by the royalty transaction?
ZCCMIH will not be disadvantaged by the company, as the company will now be able to extract more value from Kansanshi than would have been the case through dividends. And these amounts will be paid in a more predictable and reliable manner.
Another question from Elias Kangwa. How then will ZCCMH ensure checks and balances on copper production figures?
ZCCMIH will continue to hold 20% of the shares in Kansanshi and will continue to have 2 out of the 10 directors representing its interests. ZCCM will therefore still participate in the governance of Kansanshi and will continue to have full visibility of Kansanshi operations. In addition, the royalty agreement gives ZCCMIH access and audit rights. This will ensure ZCCMIH will have the right to access the mine site as well as to inspect Kansanshi's books and records.
Elias Kaunga again asked, how does this benefit the government and the Zambian people?
This royalty transaction will allow ZCCMIH to receive a regular income from Kansanshi. The great advantage of this predictable income is that it will allow ZCCMIH to raise capital on the back of greater cash flow certainty. This will give ZCCMIH the financial firepower to achieve its strategic goals, which is to see it play a far greater and more active role as a Zambian mining investor throughout the mining value chain, from exploration through to value addition, driving investment, and creating new businesses and jobs for ordinary Zambians. So not only will this result in ZCCM being able to make regular dividend payouts to its shareholders, including JRZ, but it will also position ZCCMIH as a true player at the heart of our mining industry.
Elias Kangwa again asks, why did ZCCMIH seize legal action against Kansanshi Mining PLC and its directors?
I refer this question once again to our Chief Legal Officer.
The transaction is part of the wider discussions between the government and FQM on how best to work together to move Zambia forward as a key mining jurisdiction and to work towards a 3 million ton copper production target. These discussions have resulted in commitments by FQM earlier this year to invest an estimated USD $1.3 billion, that is, in both the Enterprise Nickel project at Trident and the S3 expansion at Kansanshi. In the spirit of these discussions and having a collaborative relationship going forward, it was agreed by both ZCCM and Kansanshi that the current and historical legal disputes between the parties be discontinued.
Chair, we have other questions from online that have been posted. And one of the questions is from Chabota Hantuba, who asked, kindly clarify the status of ZCCMIH Class A shares upon completion of the proposed transaction. In particular, would the current voting power of the holding company as a shareholder in any way be diminished?
I refer this question to our Chief Legal Officer.
ZCCM will continue to hold 20% equity stake in KMP post-transaction, and the voting rights will be available to the directors on the board.
Another question from Chabota Hantuba. What is the significance of these VAT funds for the transaction?
I think he refers to VAT refunds. Clarification? Yeah, I refer to the Chief Investment Officer.
Thank you, CEO. So members, you may recall at the time when we were making the presentation, we made mention that one of the preferred outcome of the transaction was to ensure that there wouldn't be any benefit leakages. So at the time when you are deciding to pay a dividend, you look at the profitability of the company as well as commitments, and the cash that is available. In this case, Kansanshi is owed the VAT by government, and this cash has not come into the company. So at some point, Kansanshi is going to receive this dividend, I mean the VAT refund from government. And because this was happening at a time when ZCCM still had interest, this transaction structure entitles ZCCM then to be able to get each 20% of whatever VAT that are going to be refunded to the company. So it speaks to the fact that we want to capture the current benefits as well as all the future benefits. If it is assumed today that this VAT was paid to Kansanshi, Kansanshi would have had more cash and they are going to pay more dividends. So that is the significance of the VAT refund that is incorporated in the transaction to protect the CCM benefits in future.
The last question online, Chair, Chabota Hantula again. With reference to your breach and remedy provisions, why would ZCCMI demand reinstatement of the shareholders agreement if indeed the royalty rights route is a better option?
I refer this to our Chief Legal Officer once again.
It is not unusual to have an exit provision in any agreement that the parties enter into. And I think a transaction of this nature demands that such an exit provision be provided for. The fact that there is a provision that speaks to possible reinstatement does not mean the royalty is not of value. It does not mean the royalty is not important or beneficial to ZCCM and indeed to the Republic. It is still beneficial, but it is always prudent to provide for an exit clause.
Chair, we have one last question from Peter Kazwala, who says, I assume the loan note that will be issued will have to be paid back. If so, when and how?
I refer to the Chief Investment Officer for clarification.
Thank you, CEO, and thank you, member, for the question. So, as mentioned during the presentation, the loan note that we are seeing there is just being used for implementation purpose. So we mentioned that at the close of the transaction, a dividend of 685 would be declared to ZCCM, and thereafter the same will be given as the loan note to Kansanshi, and subsequently this will be settled by way of the royalty right of 3.1% that we are going to have, and then the loan note will cease to exist. So it is this loan note that is going to entitle us to a royalty rate of 3.1%. So there is no interest, and it will happen simultaneously as and when the transaction is happening.
Those are the questions, Chair, from the online, and those that were received prior to the meeting.
Thank you very much, Corporate Affairs Manager. May I come into the room and ask if there are any questions? I believe there is a mic on the floor somewhere. So if you just raise your hand, we will make sure the mic gets to you. And whilst we are receiving the mic on the floor, I just want to emphasize to everybody on the line and in the room that these slides, the summary slides, will be posted on the ZCCM website. So if you wish to go into them in deeper detail, you will find them on the ZCCM website after this meeting. Thank you.
Good morning. My name is Mope Victor. I'm a Keto resident. I wish to thank you all here. And I have some questions. I will just go back to the first question, which was also asked on the control measure. Besides the visits and the board members that will be there, there should be the need to have offices at each and every, maybe at Kansanshi and any other area where we have the shares, so that we have the first-hand information, which I believe is very important. And then on On the loan note, I'm sure money is not there. No wonder we have that situation whereby there will be no cash being passed on from ZCCM to Kansanshi, because the loan note is a promissory note. So I'm sure there's a date that has been agreed on between Kansanshi and ZCCM IH. So I don't know if there will be any benefits besides that. And then again on the expansion, on the part of expansion, I feel ZCCM IH should also, as they are doing the expansion, they also do the benefit of starting to employ the Zambians. You recruit the Zambians. Why am I saying this? I've seen some foreigners who are doing very well just after maybe 6 months. So ZCCM has been here in Zambia as that measure where you also be employing, you also be benefiting, because you'll be hiring the same Zambians, very much skilled Zambians. So that at the end of the day, as you are producing, you also be giving a part to the Zambians, and if there should be any other part whereby the company wants to withdraw, you still be running. So I also want to emphasize on that point that if there could be that situation whereby you also start to employ, and then the other part, participation on production, which is almost the thing that I've just said, which is very important. There are a lot of sectors, or let me say, divisions in the mines. We can pick up, maybe we do the production, we extract the copper ore, we do the hauling, you see? So if you do such a thing, whereby you get the people who are Zambians to run those things at the mines, it will be very, 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 very much profitable for the Zambians. And then to just sum it up, I want to ask if ever at some point, if ever could happen, at the end of the day, you should be looking at the shareholders. There is some company at the end of the day, if anything. Thank you.
Mr. Mobi, I didn't hear the last comment. I did not hear the last comment.
I would appreciate most if at the end of the year, you give each and every shareholder a hamper, a t-shirt,
Okay.
and then just remembered, on the part of the corporate social responsibility,
Yes.
I feel there should be a point whereby when you want to promote maybe, say, a golf tournament, and then later on, the profits comes to show that we did not make the profits. That's why we have come up to 0.6 share out on the dividends. But you had so much to pay for maybe a tournament. So please, on the corporate social responsibilities, if you can't manage, don't do it.
Thank you, Mr. Mobi. And I'll ask Corporate Affairs Manager, since she is here, to get the details from you of how we execute on that last point. Let me also take your penultimate point, and then I'll hand it over on employment, and I'll hand it over to CEO and his team to answer the first few questions that you asked on the loan note and the control measures. So for us as ZCCM, we take the mandate of creating jobs in this country very seriously. It is part of our strategy. It is part of our mission. We are owned by the people. On paper, we are owned by the government of Zambia and the minority shareholders, but the government of Zambia, together with NAPSA, owns the bulk of this company. And so, whatever the national agenda is in terms of creating employment, creating quality jobs, creating economic opportunity through supply chain finance, through value addition opportunities, looking at the SME sector, all of this is part and parcel of what we do. So, day before yesterday, Mopani, we were in this very room, opening a Mopani Women in Mining Forum. It will be an annual forum, and we saw some amazing projects in the hall across the road there being done by Zambians, young, middle-aged, older, but Zambians working for Zambia. And these are projects that we wish to expand upon. So I hear you on employment. On Kansanshi in particular, some of our colleagues went to Kansanshi yesterday. The numbers they came back with is that Kansanshi today employs 6,000 people. 3.5% are expatriates, meaning somewhere near 96% are Zambians. The new S3 expansion will create 600 new jobs. This is something very important, and I'm glad you've raised it, because all of us in this room, all of us on the line virtually, do want to see better employment in this country. So thank you for raising that. We have a strategy session coming up. We will re-emphasize, somebody please, that we have a concerted conversation around this, and we include it in some of our KPIs for tracking. Thank you for that. CEO, can you take the first few questions from Mr. Mohammed?
Thank you very much, Chair. I think the second question related to the mechanism of the loan note, and I'd like the CIO here to respond in detail.
Thank you, Chair, and thank you, CEO. Maybe just also to explain a bit in terms of what we're trying to do, the structure and some of the consequences. So ideally, the other option would have looked at in terms of implementing the royalty, would have just said the current 20% that we have in the company, we convert it into royalty model. But we also recognize the fact that the Zambia Revenue Authority also have their own interpretation. And there might also be a risk that probably they are going to interpret this as a disposal, on which then property transfer tax is going to arise. So what we did was, with our consultants, we looked at what would be the best implementation methodology. That's how the issue of the declaration of a dividend came up, and we confirmed with Zambia Revenue Authority that there won't be any property transfer tax to be levied. Also, from the perspective of the loan note, they also confirmed that it won't attract any property transfer tax. And then it being given as consideration for the royalty rate of 3.1%, they also confirmed that there won't be a property transfer tax. So as mentioned, it was for purposes of implementation, and also ensure that there will be no tax liabilities that are going to arise. So it's not like you are giving a new loan. We're just basically converting the rights from the dividend model to a royalty model, but we came up with this implementation method to ensure that we don't suffer property transfer tax as a tax consequence.
Thank you, Chief Investment Officer. Mr. Moffat's first question related to how do we inspect, check what's going on, besides visits. I'd like to say that in addition to visits, there are certain requirements of our investee companies, which include regular reporting, mandatory reporting, and we also subject their reportings to our own audits. And if our chief internal auditor would like to perhaps give a bit of detail in what would go into such an audit.
Thank you. I think generally, like any other audit, the agreement provides for certain rights for the internal audit function under ZCCMIH to be able to conduct reviews. Obviously, these reviews will be driven by our risk assessment of the operations of Kansanshi. So we do have those rights that have been enshrined in the agreement. Thank you.
Thank you, team. Mr. Murphy, I hope that we have been able to answer your questions.
When ZCCM IH coughs, someone should also listen. So there's need that that power to be a driving force for the economy of Zambia, so that when you cough, I'm sure I understand what I mean. They hear you. When I cough or when I smile, they know I've laughed or I've smiled. So please, let's fight so that the government can be supported by us. Not only the government fighting each and every day. When the government wants something, they run to ZCCM. They will know that this is going to be, instead of trying to negotiate for any other thing, they will, let me go to ZCCM IH, and this is what's going to happen, and it's going to work. Please.
Thank you. Thank you for that. And we will, as I said, we will take it away. Directors, may I ask if any of you would like to comment on this aspect? Looks like my directors are okay, but point well taken. Point well taken.
Thank you very much for the opportunity to ask a few questions on the proposed transaction. I must confess that this is definitely a better arrangement than the dividend mode, because I think we experienced a lot of problems with our colleagues. And I'll seek your indulgence because I think I've got quite a few points that I would like to the team to elaborate on. When the deal was announced, the following were stated. The sharing would be based on 3.1% of gross revenue over the life of mine, which ends in 2044. And I think there was a statement that was made by, I think, the minister, that the revenues would be in the range of $50 to $70 million per annum. And I think it's those points where I'll base my presentation and questioning, perhaps. We were told that the gross revenues would be calculated based on copper and gold. Now, if we go, and I think that is stated on page 12 of the circular. However, if we go to page 66, which talks about revenue recognition, and I will go to it. It says revenue comprises the fair value of consideration received or receivable for the sale of copper cathode, copper and gold in anode, copper in concentrate, and gold and acid, both in local and export markets, in the ordinary course of Kansanshi's mining activities. Then I'll refer you to page 56 of the same circular. And the point there I'm trying to make there is that, as far as I know, sulfuric acid and tolling services are not metal, but they constitute gross revenue. And if you look at page 56, you will note that the revenues from acid and tolling are quite substantial. So the question is, are these included in the calculation of gross revenues, or if we've left them out, why have we left them out? Because you see, I think the whole reason why we are changing from dividend to royalty has been one of fair sharing. And though I'm saying that this deal is better, it's still not good enough because there are a few points that we need to elaborate on. So the first one is obviously the acid and the tolling. I think they should be included in the gross revenues. And in any case, I think if you look at the project, the S3 project. The S3 project will look at sulfidic mineralization, which means that there will be more concentrates produced and there will be more sulfuric acid produced. And similarly, there's more concentrate that will come from the Sentinel nickel plant. So there'll be tolling revenues as well increased. So I think for fair sharing, we need to include the acid as well as the tolling revenues. And then I refer to the 50 million to 70 million, which was announced. I don't know whether this signifies a capping on the royalty that ZCCM will be receiving. I don't know if it is a cap, because those two amounts of monies, if you were to do a calculation, they will indicate that at 50 million, the price of copper will only be $8,064 per ton. At 70 million, it will be $11,290 per ton. Now we know in future we're talking about electric vehicles, and it has been forecast that the price of copper will go to 15,000 or even 20,000. Now, if we're just talking about 50 to 70 million, that suggests a capping, because if we were to do calculations based on the 200,000 tons of copper that has been mentioned in the circular and the 3.1%, the amounts actually go into hundreds of millions of dollars per year. So I think we need to clarify and make sure that there's no capping on the benefits that ZCCM will get. I know the point about the 3.1% has been discussed, but I think I'll look at it from a different viewpoint. ZCCM has 20% in Kansanshi, and the monies, from a logical viewpoint, is that the royalty will be paid out of net profits. It cannot be paid out of anything else. It will be net profits, and I stand to be corrected on that, okay? Now, if indeed it is to be paid out of net profit, because they can't pay it out of anything else, it suggests that the 3.1% is slightly on the low side, because if you were to do a calculation based on the 20%, as well as the percentage net profit, it suggests that the net profit is only about 15.5%. That's how you get 3.1. And I know my colleague talked about previous calculations based on past performance. This benefit need not even be based on past performance. It needs to be based on current performance. Because if you look at the records of how much profit has been made, percentage of the net profit as a percentage of the gross revenues, you find that in many instances it's over 20%, which suggests that this 3.1 really needs to be closer to 4%. And I think my colleagues, if they were to look at the record, the profit over the last 10 years, in terms of net profit, in relation to the gross, they'll find that in many instances it's over 20%. So I think the 3.1 is not a fair way of sharing. There's a lot of money that is being kept in Kansanshi, and I think being a country that's indebted and so on and so, I think we need to maximize returns from the minerals that we have in this country. There was a talk about the VAT, and I think it was stated that it will be as at June 2022. Is there a particular reason why it should be June 2022 and not, more or less at the time that we'll be closing this deal? Okay. And then I think my comment is that I know that IDC and the Minister of Finance have got an overwhelming majority vote here. It's 77.6. And I think if we reflect over the experience that we have had with Kansanshi, that is the same fate that the minority shareholders have faced, that Kansanshi had 80% of the vote. And even though we're talking about retaining the two directors at Kansanshi, their effective way of managing the company, I think, is almost zero, because the threshold of voting is 75%. So whatever they put on the table will be voted down. Similarly, we don't know what government and IDC have decided. They could push this through and pass it because you've got 77.6% of the vote. So I'm proposing that it's either we do not vote this proposal, or if we have to vote on it, then it should be subject to clarifying on those points that I have outlined. Thank you very much, Madam.
Thank you very much, Mr. Katoto. I'll just go through it again because there were quite a few points raised. The first question, I think, were the issue of the non-metal revenues, the sulfuric acid and the toll treatments going forward. Are these included or not? Chief Investment Officer, would you like to comment on this?
Thank you, CEO. As mentioned during the presentation, I think what we're discussing it's what is called commodity royalty. So it's supposed to be based on the commodities that are being produced. However, Mr. Katoto has raised a very important point. But let me take this opportunity also to give you comfort. Remember, what we submitted was that at the time when we were looking at what would be the ideal rate, we started with a valuation of our 20% equity into the company. So when this valuation was being done, the acid that is being produced was taken into consideration, as well as any free metals that arises from the tolling activities that are there. And then we looked at now, this is what we're supposed to be getting as a benefit from the system perspective. And then we translated it into an ideal royalty rate, which was 3.1%. Just for demonstration purposes, it means that if we needed to include this as royalty, assuming it's practical, then the royalty rate definitely should have been lower than the 3.1%. So this was captured at the time of the valuation of our 20% equity interest in the company, and then we came up with an ideal rate, knowing also very well that we will not be participating in there, but just based on the commodity that is being produced, then that's what we came up with a rate of 3.1%.
Thank you, CIO. The second question from Mr. Katoto was about the announcement, which indicated at the time that the royalty expected per annum would be in the range of 50 to 70 million per year. And his question is this a cap, or was this just an indication?
Thank you, CEO. So to make mention and also give comfort to the member that there is no any capping that has been provided. As we made in our presentation, we did indicate that ZCCM will benefit from all the upside potentials. So I think those numbers were being mentioned just for demonstration purposes. I think during the presentation, I also made mention, like for the year 2021, Kansanshi made revenue of 2.1 billion. And if royalty was to be implemented, ZCCM would have gotten about $64 million. So there's no capping. We benefit from all the upside potentials of the production as well as the metal prices.
Thank you, CEO. The 3.1% has been discussed, the royalty rate. Mr. Katoto estimates that this is based on an average profit of 15.1%, and that really the royalty rate should be closer to 4%. So question is the 3.1 not a bit on the low side? CIO?
CIO, before you go, may I be clear? I think also Mr. Katoto was asking for clarity or was working on the basis of net profit. This figure is at the revenue level. It's 3.1% of revenue, gross revenue, yes, not net profit.
What I was trying to explain is that this thing can be worked in two ways. He's taken a historical perspective, okay? But I'm saying that you can actually do it on current figures going forward, okay? And if you look at the sharing, if for instance you were to do the dividend thing, your full sharing would be based on what the net profit is in that particular year, as well as your 20%, okay? That would give you your share. Now, if you look at the profit that has been made over the last 10 years, because I've looked at some figures, the profit is in many instances in excess of 20% as a percentage of the gross revenues. Okay? And that's why I'm saying that this is where I think that the sharing is not equitable.
Thank you for that clarification. CIO, do you wish to comment on that?
Thank you, CEO and Chair, and thank you, Mr. Katoto, for that clarification. Just also to provide additional information that in terms of the dividend policy of Kansanshi, they are not supposed to pay the entire profit that is made. So according to the policy, they are only supposed to pay 15% of the profit that has been made for that year. So in as much as the profit to be made might be even 30%, 35% or so, still there's a restriction where they only declare dividend at 15%. And also, as we mentioned, also take into consideration other factors such as the capital requirement and working capital requirement. And when we are coming up with this valuation, we worked with a number of external and independent consultants, and we even have an opinion from an independent consultant who made mention that in their opinion, 3.1 is a fair rate to be implemented on the road transaction.
I think what we're talking about is that this deal is moving away from dividend, in which case the dividend policy will not apply. Is that a correct understanding on my part? Because we're moving away from dividend. So the dividend, I know that there are conditions on the dividend. Obviously, paying out loans, one of them that there must be enough money kept for projects, and obviously the third one that is at the discretion of the board. I'm aware of those restrictions, but we are moving away from the dividend, in which case the dividend policy will not apply. I don't know unless my understanding is wrong, and that's where I need to be clarified. Thank you.
Thank you once again, Mr. Katoto. Again, CIO, an opinion, your comment?
Yeah, thank you, CEO. And just to make sure that maybe it's the question I didn't get clearly. My understanding was, I think the contribution from the member was that the 3.1% is not ideal, because if you look at the profit that is being made, it's more than 20% compared to the revenue. Hence, the basis should have been maybe around 4.1%. And in my submission, I was making mention that for the dividend perspective, there's still a restriction in terms of the policy, which restricts to 15%, subject to those other items. And also, as mentioned, when we were coming up with the 3.1, it was a scientific and practical process that we went through, which was quite lengthy. And as mentioned, there's even an opinion from the consultant that we worked with to say the 3.1 is a fair rate based on the calculations that were done.
Thank you, CIO. I think the next point from Mr. Katoto was the issue of the VAT receivables, 20%, as at June 2022. Question being, why not at the date of closing this transaction?
Thank you, CEO, and again, thank you, member, for that submission. So as we made during the presentation, we indicated that the effective date of the royal transaction will be 30th June 2022. It means things are supposed to be effected there and then. So ZCCM is going to get the royalty for the last 6 months. So it means then you are supposed to get double benefits if you are going to go beyond that. So the commercial negotiation perspective, so you are dating back everything to the effective date of the transaction, where we also start getting the royalty payment starting from 30th of June.
there other questions from Mr. Katoto?
Mr. Katoto?
Yeah, I've listened to the answers, and I'm not very sure that I'm convinced that the best deal on the table. It's certainly better than the dividend route that I must give credit to management, but I think we can still do better. You know, when you look at negotiations, you get what you negotiate, not what you deserve. Okay? If you look, I can give you a parallel. Panama, the same company, FQM, they were paying a royalty of 2%. And I think in 2021, they paid 61 million. Okay? The Panama government rejected and said, we've got to have fair sharing. They've got a new agreement in place now, which gives them 375 million a year, a six-fold increase. Okay, I know people have given ranges that these royalties are between this and that, but I think you've got to put your best foot forward so that you maximize your benefit. I don't think we've maximized our benefit in this particular instance. Okay, apart from the 375 million, the government is going to get between 12 and 16% of gross profits, as well as they're going to get 25% of taxes, which was not there before. So that tells you that these negotiations are subject to how much you're prepared to accept and how much you're prepared to push. But 3.1 certainly is not very good enough, because there will be a lot of money that will be left in Kansanshi. Thank you. I think I've taken too long. I think it's better that my submission is taken as is. But I must put on record that the explanations that have been given are not satisfactory. Thank you very much, Madam Chairperson.
Thank you, Mr. Katoto. Are there any other questions in the room? I don't see any. Loisa, can we confirm that there is nothing online that has come through?
Chair, there's just one last question from Yanel Strat, who is asking, what will be the return to shareholders after this transaction? What will be the dividend policy? What will be the return to shareholders after this transaction, and what will be the dividend policy?
Okay. As for return to shareholders, this will be communicated, as said earlier, at the annual general meeting scheduled for May 2023. And as for the dividend policy of the company, I wish to state that at this moment, the board has not confirmed a single number, but is committed to returning dividends to all shareholders on a regular and consistent basis. And this was one of the motivating factors for entering into the royalty agreement with FQM.
Thank you very much, CEO. Before I present the resolution to the members, I think we've done this now. We're going to voting, right? Thank you. So the resolution relating to the proposed conversion of the dividend rights and certain economic rights attached to ZCCMIH's 20% shareholding in Kansanshi Mining PLC, KMP, to a 3.1% life of mine gross revenue royalty pursuant to the royalty agreement and the related variation of the rights ascribed to ZCCMIH's Class A shares in KMP, the transaction. That the transaction be and is hereby approved and the directors of the company be and are hereby authorized to A, do and procure to be done all such acts and things as they consider necessary, expedient, or appropriate in connection with the transaction, and to give effect to or implement the transaction and this resolution, including for the purpose of obtaining any approval, consent, clearance, or permission that is a condition to the transaction, or that the directors consider necessary or expedient. And B, agree such modifications, variations, revisions, waivers, or amendments to the terms and conditions of the transaction, provided that such modifications, variations, revisions, waivers, or amendments are not of a material nature to any documents and arrangements relating thereto, as the directors may, in their absolute discretion, think fit. I now call upon Ms. Longwani again to propose the resolution. Thank you. And I invite Mr. Rodney Machila to second the resolution. Thank you, Mr. Machila. I now put the resolution to the meeting, at which point COPSERV should come up and provide the guidance on how the voting system is going to work.
Good morning, shareholders. We understand we have shareholders who have joined virtually, and of course who have managed to join with us here physically. So I'll take you through two processes that we will observe to do our voting. Allow me to start with those that have joined virtually. If you have joined virtually, you already have an electronic ballot. If you look on your electronic ballot to the extreme right, you will see the resolutions that are being tabled before this meeting for voting. To activate your voting, you simply need to select the desired choice. There is a for, against, and abstain. So you go ahead and click the desired choice. For those that may have moved from the browser, we have keyed in the link, so you can simply go ahead and click that link. It will take you to the electronic ballot. So that is for those that have joined us virtually. But in case you still have challenges, there is still we can actually assist you. You can send your question through the chat box. We'll be able to attend to you in case you're facing challenges, or you can contact our help desk at COPSERV. Then moving on to those that have joined us here physically. If you already have your gadget, you can follow through the same instruction that we have given those that have joined virtually. But in case you didn't come with your gadget, our COPSERV team here will be able to give you a tablet that you will use to cast your votes. I thank you. Over to you, Chair.
Members, thank you very much for your patience. I believe that COPSERV is ready to show us the results as people voted. Thank you. Members, we have projected on the screen the results. We are not looking at resolution number 1. We're not looking at resolution number 2, forgive me. We are looking only at resolution number 1. Number 2 is what we said we would bring to the EGM in the month of May. So from the results that you can see on the screen, we have 150,510,427 votes in favor of the transaction, and that amounts to 99.27% of the vote. We have against 718,619 votes. That amounts to 0.47%. We have abstentions totaling 385,482, and that amounts to 0.25%. With those numbers, I declare the resolution carried. Thank you, Kopsa. There being no other business on the agenda, I want to thank the members for their contribution and the directors and management for their attendance. I declare the extraordinary general meeting of the company closed, and thank you all for coming. For those who are on the line, thank you very much. For those who are in the room, I'm inviting everybody present to have some refreshments outside this room. Thank you.